We've got a lot to go over today, and this is how I feel. Yes, this is how I feel, and I'm going to go into as why I feel like this. I feel like screaming from the rooftops. I've been talking about the jobs numbers for some time now. I've been talking about how we need to see the level of jobs numbers coming down to show a weakening economy because the feds were trying to slow down the economy, right? And we kept seeing these job numbers come in that were like, what the heck? We were scratching our heads. We're like, why are these jobs numbers coming in so high all the time? Like, what is going on? Well, guess what happened this last week? This makes me so mad. This is what happened last week. The jobs numbers were revised down 818,000. That means that all of the jobs numbers from April 23rd to March 24th that were reported. Remember, every time they reported these really high jobs numbers, mortgage rates got worse because it was going against what the Fed wanted, and mortgage rates either stayed the same or got worse every time we had these jobs numbers come out. And it was making everyone crazy. Well, they just revised their numbers and said, oops, we made a mistake. A third of all of the jobs we reported over the last year actually never were jobs that were created. It was an error. So almost a million jobs. And that's the crazy thing. That's what makes me mad because mortgage rates were depending on this data. So were the feds to start lowering the Fed funds rate. And these numbers were fake. They were fake for all year round. And I was screaming it from the mountaintops. You might have heard me talking about it. But this is quite astounding. So now 818,000 jobs wrong. That never happened. The 818,000 jobs, crazy. That's a third of all of the jobs that they said that were created were not created. They were literally fake numbers. So they were propping up the economy, saying it was great with all these fake numbers. In reality, it wasn't. So it's just frustrating. And because we could have had much lower rates. Had we had proper numbers, we would probably be in the fives by now. The unfortunate thing about this is the markets don't react to revisions. They only react to what's happening at the time. So I'm frustrated. I know a lot of economists are. If you were watching MSNBC last week, one of the guys that talks to the bond trader guy absolutely went bonkers. Just had a rant, and it was classic. But on live television, just went nuts on how terrible the Bureau of Labor Statistics was with these BLS jobs numbers. But anyhow, I digress. We are moving on. This never should have happened, but it did. So now what? What do we do moving forward? So first off, here's where we are with the bond market right now. So it's very, very flat. But look where we are on this candlestick chart. We went way up, and then we dropped a little bit. We're slowly gaining back ground, and we're right now in the middle of this range on this Fibonacci, between these two Fibonacci levels. We're struggling to stay above it. We went down and we touched it today, and we're going back up. We're only up 1 basis point, but we've got a little bit of a gain over the last week, 2 weeks, not a lot. This was the big move. And then we went down, got worse, and then we're coming back slowly. So if you look at the 10-year to kind of see what that's doing, we're stuck right on this Fibonacci level. It wants to go lower, but it's not. So we're somewhat stuck in a pattern right here. That's kind of a good thing. Stability is good, but we really want lower rates. So we want this 10-year to burst below this Fibonacci level. I'm going to be watching that carefully. Hopefully it does. If it doesn't, then we're going to just be in this tight range for the next week, most likely. So where are interest rates now? I like to show this because this explains how rates work. This is a really good, you can actually go onto Google and you can put in mortgage rates, and this calculator pulls up. It's a fantastic calculator. It takes into account down payment and credit score, and it gives you the average rate for that. So here in this circumstance, you're at 800 score. Really, really good. 10% down. Your rate's going to be 6.5. Okay, that's pretty good. Now, everyone's going to see this because this is what all of the lenders post. All of the lenders are online showing these rates, right? Your customers are going to see this and say, oh my gosh, I'm going to get a rate in 6.5. And then I might give them a quote of 6.99. And they're like, wait a minute. I swear I saw it was 6.5. You guys are way too high. Well, let's investigate that, because this is with an 800 credit score. What if they have a lower credit score? This is 720. So they went from 6.5, okay, to 6.9 just because their credit score. This is why my FICO Boost program is so important. So if your customer comes to me and they've got a 730 credit score, I will let them know what they can do to get their credit score to 800 to get these lower rates. But the loan level adjustments that are out there right now for anyone with a 720 to 739 credit score make that rate almost a half higher. So when your customers are looking online, no lender is going to advertise what this is going to be because it doesn't look sexy. So that's confusing the consumer. Now, what if it's lower than 720? What does it go to there? 7.5 with a 660 credit score. Now, notice the FHA credit score, the FHA rate is much better. The lower credit score buyer will always do better with an FHA loan on the rate, just because of the loan level adjustments that Fannie Mae and Freddie Mac have for credit score. And if you go even lower, 620 credit score, look at that, you're in the eights. So if you have a customer that says, oh my gosh, the quote I received from any lender out there seems high, investigate what their credit score was, because that's most likely the reason. Everything else being the same, you can go from 6.5 to 8.132, depending on your credit score. Very large variance there. So when somebody says, what's your rate? And they say 6.5, that's for the best of the best. If they come in under here, you're not going to get that rate. So I just want to make sure everyone understood kind of how this works, because it's very important. And consumers don't really understand what they see on TV versus what they see here. And I try to explain it to them, but they think I'm a salesperson, or the lender's a salesperson trying to hoodwink them. But this is the reality behind it. And I explain this to the customers. And I also introduce my FICO Boost program. So FICOBoost.com. Remember, you can go there. It's free. FICOBoost.com. I will evaluate their credit, tell them exactly what they need to do to get their scores up as high as possible so that they can get the cheapest rate and the lowest rate. So that's just part of the services I provide. So that's kind of where rates are. Here's the 3 things we need to be looking at this week and that are going to impact the rates. So first off, inflation, we have the core PCE on Friday. It's expected to come in at 0.2. So we're going to be in the 2.6 to 2.7 range. Now 50 basis points cut is what we're hoping to get. I'm pretty solid as 25 basis points no matter what, but we may get 50. So we'll see what happens there. And then also we have talking feds. We've got daily, we have Bostic speaking on the 26th, 28th, and 29th. They are going to most likely have an effect by what they say on the bond market. So this could give us some really good insight as to what the September rate cut will be. And then we have the state of the consumer. On Tuesdays, the consumer confidence. This always has an impact on mortgage rates. And with that and the CPE, it's going to be interesting to see how that comes out on Tuesday. So I'm going to be watching these very carefully. If we have contracts, I'm going to be timing the lock accordingly. The quarter cut to the Fed funds rate is already baked into the markets. Everyone knows that's going to happen. So we're not going to see a huge movement. It might move a little bit, but we'll see what that does to the actual bond market, and that may create some movements. So next step is the cross qualification. So now this word has been thrown around a lot. And I think in this new era of the new compensation agreements that are happening and buyers coming directly to the listing agent more and more, listing agents are going to need to show a lot of value. They're going to need to show a ton of value. And if we can help them create an environment that's going to protect them as much as we can in this market, that's what you need to be offering as a listing agent. And the cross qualification is one of those pieces. So what is the cross qualification, you might ask? You might already know what it is, but I'm going to go in detail. So first off, what the cross qualification does is it takes away the mistakes of a lender. And let's just be honest, a lot of lenders out there make a lot of costly mistakes. They do. And they're simple. The loan officer is the one that looks over the file, pre-underwrites it, but they're not the underwriter. The underwriters don't ever look at the loan file at the beginning. It's very rare. Now we do, but that's rare. Most of the time, it's the loan officer looking over everything, looking over the tax returns, saying, okay, this looks good. I ran it through this automated system based on the numbers I derived from the tax returns, and we got an approval. Yay. That's what most pre-qualifications are. That's garbage in, garbage out, right? Whatever the loan officer put in the application based on the data he read from the tax returns goes in, we run it, we get an approval, we issue the pre-qualification. Now, what happens if that lender didn't read the tax returns properly? Or what if they didn't get the tax returns, they just got W-2s and pay stubs and didn't take into account the company that they owned? There's all kinds of mistakes that can happen. That's why we do the platinum approval up front, but we can get into that in just a second. So what the cross qualification is, it's the lender, the favorite lender of the listing agent, reviewing the buyer and going over everything, not as much as detail as the other lender, but really scrutinizing it and gathering some information to try to find out where the issues may be, to see if there's any red flags. So as a listing agent, you need to protect your seller from disaster. And this is one of the ways of doing it. You can make it mandatory. Any offer that comes through has to be cross-qualified with my preferred lender to make sure they are on up to par. Now, if they get pre-qualified through me, we actually issue a $5,000 guarantee to the seller that the loan will perform. So if you refer a customer that is looking to buy your listing, and we do the pre-approval, we do our platinum approval, we will give them a $5,000 guarantee. So if the loan doesn't perform, we give the seller $5,000. So you can add that to your listing presentation as part of the team that you have that can help protect them as as the seller of that property. And then also, you can tell your listing or your sellers that you have an entire team of the nation's best here to serve you. So I really think that having the cross qualification as part of your listing strategy or your listing consultation is very, very important. So let's go into this a little bit more in detail. What do we discuss during this cross qualification? Now, first off, we want to go over the income, right? We want to go over the debt to income ratio, employment history, any gaps that could have been in the employment. We want to go over everything. So I'm going to go into a very deep question and answer session. I'm going to go over what is their income? How are they paid? Are they hourly? Have there been any gaps of employment? What is your average hourly, average hours that you worked? Because if they full time and they say they do 40 hours a week, but they took 6 weeks off over the last, year, and now that impacts their year to date, we could have a debt to income ratio problem. So I'm going to ask all of those really hard questions because most applications are done online, which I don't do. I do in person or over the phone. But when they're doing it online, buyers are liars. They just don't understand what the loan process is. So they'll put in 40 hours a week at $29 an hour, spits out and that's where we get our information from. So properly reading the verification of employment and the pay stubs, very, very important. I will go over that in extreme detail. I will also do a verbal credit review. We can do a soft credit pull on these cross qualifications if they're okay with it. Now, we don't want to scare a buyer away, but at the same time, this won't hurt them. A soft credit pull doesn't affect their credit at all. So, but I'm going to do a deep dive into their credit. Things that aren't asked, usually on every application out there, there's no answer or no question for, do you have any IRS payment plans? So for any back due taxes, do you have a payment plan with the IRS? That's not on the credit report. It's not on the application, but it bites a lot of people in the booty. So I ask that. And then I ask a lot of other questions regarding their debts and any potential debt that could be in the past that could be popping up in the future. We do a lot of checks on the backside of the loan, not just the credit report, a lot of other things like, do you own any other properties with family? That kind of thing. So we're going to really, really go into detail on that. And then we go into assets. I'm telling you, assets are the biggest problem when qualifying. The money's coming from, they say, oh yeah, I've got $50,000. And then the lender says, okay, well, who do you bank with? I bank with Wells Fargo. Perfect. They put that in the application, 50,000 Wells Fargo. And then they get the bank statement and there's no money there. And you're like, well, where's the money? Oh, I have that actually in my house. I have like $20,000 in cash that I got from our wedding. All of these things pop up. And you're probably thinking to yourself, yep, I've seen that happen before on one of my deals. Well, one of the questions that the application doesn't ask that I do in this cross qualification is, where is the money now? Where is the money right now so we can make a plan to get that into an account that we can season? That is not on the application. It just says, yeah, who do you bank with and what's your balance? And in the buyer's mind, they think, well, I'm going to have that. I'm going to put that into my account next week. So let's just say I have $50,000 in there. That's what happens with online applications. And again, questions aren't asked that should be asked during the loan application process when you do an online application, but this cross qualification will weed those out. And then the estimated payment and cash to close. You would be so surprised at how many times I do these cross qualifications and the buyers are shocked by the payment on the offer that they made. They made an offer on a property and they're looking at the payment. They're like, wow, no, that's not what my loan officer told me, or that's way high. What are your rates? This is crazy. Well, a lot of times they don't tell you the payments. They just say they're qualified up to this, and the buyers don't read and go over everything in detail. So going over the cash to close, and that's all of the closing costs and their payment, including HOA, taxes, insurance, and everything, making sure the buyers understand that so that they won't just back out of the contract after it's done because they were shocked by the payment. So this is important. And if a buyer is unwilling to do this, here's what you need to tell them. If a buyer says, you know what, I'm not willing, my buyer's not willing to do this, or the buyer says, I'm not willing to do this, you can say, okay, well, I'll let the sellers take that into consideration when they're reviewing all of the offers. And what do you think they're going to do? Okay, I'll have my buyer call them. You need to protect your listing more than ever in today's environment. And adding the cross qualification to your system is really, really going to help you a lot. And it only takes me about 15 to 20 minutes. And it's really going to help you and protect your seller. So, and it's going to add a lot of value to you as something that you can offer your sellers when you're doing a listing presentation. So our team, Woolen Team Pre-Qualification, has that $5,000 guarantee. And I'm telling you, if you say, you know what, if you have Sean Woolen and his team pre-qualify, which is myself, Sandy Richards as my loan partner, my processor Diane, and my underwriter, if my team, that's my team, we are going to guarantee you by $5,000 that your buyer is going to perform on your purchase. This is huge that you can present to your sellers as well. So that's a little bit about what's happening today in the market. That's a little bit on the cross qualification. I'm going to go ahead and stop share and jump right into here and answer any questions that you may have regarding what's happening in the markets and the cross qualification process. Any questions on the cross qualification? No questions, huh? Any questions on what's happening with rates?
Hey, Sean, Kathy asked, do they get another dink on their credit report? LOL, no pun intended. Haha, pickleball coming out.
So no.
So yeah, answer that for her.
So when I do a soft credit pull, and again, I don't always have to do that because I go line by line through the person's credit, but it is very important to do that. So I would say we would prefer to have a soft credit pull done. It doesn't hurt their credit at all. It doesn't even show up as an inquiry. So it's a soft credit pull. And yeah, no, there's no dinks, no dunks, nothing like that on on their credit. So it really is like a ghost goes in, looks at their credit, looks at everything on there, makes sure everything's good to go, and the buyer won't have any impact on the credit at all. Good question. And then FICO boost, obviously, to get their credit scores higher.
And I'm guessing that $5,000 has some caveats, like they don't go buy a new truck the night before close or something like that.
Yes, I mean, it's the lender making a mistake on their income and assets for the most part. Like if they put in the application that, they make $7,200 a month, and then all of a sudden an underwriter looks at it and says, what about this unrealized loss? And what about this loan due and payable in less than 24 months that you forgot to calculate? And the loan officer says, oh, well, what does that do to our income? Well, now their income's 4,500 a month and you don't qualify. Those errors are made. You have no idea how many times those errors are made in this industry. And I see them because I have to fix them. And, but yeah, there's a lot of those kind of errors. If they do something like that, I would say it's still the loan officer's fault because they didn't warn the buyers properly on things to avoid during the initial pre-approval consultation. But I don't know if the attorneys would allow that $5,000 gift if they did that, because that's kind of self-sabotage, but it is, I think, the lender's responsibility to make sure that they don't do that. Does that make sense? Any other questions? All right. Well, it's Monday. We have a long weekend coming up for Labor Day, so you guys enjoy yourself. And I'm going to go through these questions real fast. If you guys have any other specific questions that you want to ask me outside of this, feel free to shoot me a text and I'll give you a call, or you can just hang out and I will see you at the end of this presentation live here on the Zoom call. Marketing material for CC. Is that the closing? Tom, is that the, what do you mean by CC? Is that the closing guarantee?
No, cross qualifications, I mean.
Got it. Yeah, I can put something together for me. I don't have anything specifically for that, but we can put something together for you.
Perfect.
Yep, absolutely. I think the verbiage on that, explaining that if the buyers are unwilling to do that, saying, okay, well, if the buyers are unwilling to do that, I'm going to make sure the sellers are aware of that and they'll take that into consideration when reviewing the offers. I think that's a powerful statement. You don't have to say, oh, you don't have to say, then we're not going to look at your offer. But it is important to let them know that it is part of the decision-making process. All right, guys. Well, enjoy your week. I will be here if you need anything, and you can reach me anytime. So let me know if I can be of service. Have a great day, guys, and we will talk soon.
Thanks, Sean.
You're very welcome.
Sean, could you also send me the materials regarding the cross qualification?
Absolutely. And who's speaking? I'm sorry.
This is Sue Wilson.
Hey, Sue, how are you?
I've just been lurking in the background.
No problems.
And this is Debbie Davy. Send me that too.
Yep, I will send that
Looks
to
like we'll send it to everyone.
Yep, I'll send it to
Thank
everyone.
you.
You got it.
Bye.
And remember, this is always recorded on YouTube channel, mortgageyoutube.com. Again, mortgageyoutube.com. All of this information will be on there for you guys to review anytime as well.
Thanks.
Yeah, absolutely.
Talk to you soon.
Bye.
Have a great day. All right, y'all. Have a good one. Talk to you guys soon.